What's going on, everybody? I hope you're all having a great day, and in this video I'm going to be talking to you about the beauty of commercial real estate. When you talk commercial real estate, you think big, you think money, you think whoa. And in this video I'm going to tell you exactly why you are thinking correct. We're going to be talking about cap rates, right? How this building is worth this much money by you just doing a couple of smart things, such as maybe raising the rents, maybe beautifying the building, maybe making some adjustments on your expenses. And I'm going to be sharing with you how just raising 20 bucks, 50 bucks can make you hundreds of thousands of dollars, if not millions, depending how big your building is. So guys, stick around and let's get started. And by the way, guys, if you get any value, do not forget to hit that like button. I'd really appreciate it. Okay guys, now for those of you that don't know, I started real estate at 18 years old, and then I accidentally became a real estate agent. At 18, I was buying and flipping houses from the auction. Then I became a real estate agent a couple years later, and then from residential real estate, I didn't like it. Too much emotions, too much showing houses. I just didn't feel the excitement. The kitchen's too small. The backyard's not having a pool. The inside is not whoa. I didn't like that. So I transitioned completely to commercial real estate. And my portfolio right now is maybe 99% commercial real estate and 1% residential. Now, I do residential, but only for in-house, for family, for people who refer to me, and I make sure that it's not too time intensive because I'm more focused on commercial. But that's just to give you guys an understanding of why I'm about to share with you some epic ways to make millions in commercial real estate and how you can do it and how you can prep yourself if you're already not doing it. So here's what I'm gonna do. I'm gonna grab my phone right now and I'm gonna do a screen record so my screen can pop up for you so you guys can see what I am doing. Now I'm gonna open the calculator, and I'm going to give you guys a very basic example. You have a shopping center. Now, this is a shopping center with only one suite, 1,000 square feet. And this 1,000 square feet, you are making on it $1,000 per month. So we're going to do $1,000 per month times 12, which is 12 months. In the year, you're making $12,000. Let's just say in the area that you live, if you wanted to sell this building, you can sell it at something we call a 7 cap. A 7 cap means that if you invested $1 million and you get a 7 cap property, you're expected to make $70,000 every year on that $1 million investment. 7 cap means 7%. It's just a fancier word of saying it, right? Cap rate is what they call it. This building is $12,000 a month. It's making you, because every month you're leasing it for $1,000. We're going to do $12,000 divided by 0.07. That means 7%. This means that the property is worth, right now, $171,428.57. Remember that number, okay? That number is important to remember. Now, this same property, next year comes in, you have the option to raise rents on that tenant. But you're like, he's paying me on time. She's paying me on time. I'm happy with them. I don't want to upset them. I don't want to raise the rents on them. You're hurting yourself. Not a little. You're hurting yourself a lot. You're losing the value of why you even invested in commercial real estate. You're losing the value of the opportunity that you can make yourself millions of dollars in commercial real estate because you are looking at being a nice person. And being a nice person isn't wrong. But being a nice person in the right places is when you want to be a nice person. Raising rents is normal. Raising rents, actually, the average raise for rents in commercial real estate, depending where you are, could be from 2 to 5% potentially. Sometimes right now in the markets that I'm at, we're at 3% annual increases. I know some areas are 5% increases. I know some areas are 2%. Some areas are 1%. As you know, money loses value. As you know, the value of money adjusts every single year, and that's why you want to raise rents, because you want to offset that. So now this same tenant that you want to be nice to, which is okay, it's up to you, but I'm just showing you what you're losing out on. If you didn't want to be nice to them, and we're going to say you're going to raise the rent by 3% every year, which is fair. So we're going to take the $12,000 a year that you make times 3%. $360, okay? So now we're going to do $12,360 divided by 0.07. $176,571.42. This same property that 1 year passed with, you have increased the value by, I remember the other number was 171,000 something. We're going to say you increase the value by about $5,000 plus or minus by just raising the rents by 3%. $360 extra for the entire year. Divide that by 12. You're basically going to your tenant and saying, look, I'm going to raise your rents by $30. They're not going to get mad. They're going to understand. But what you just did is you raised your property's value by almost $5,000 plus or minus by a little by doing that simple thing. Now you're like, 5,000 bucks, that's not that much. Of course it is. That's value. That's money. That's at a 7 cap. Imagine you can sell the building at a 6 cap. Let's do that. 12,360 divided by 0.06, $206,000 minus 171,000 because that's how much you were getting in the beginning. $35,000 increase. See, every time you lower the cap rate means you as the owner, when you sell it, you're going to make more money. These small $30 increases make you rich, and you're not looking at it like that. Let me tell you something, guys. I gave you a small 1,000 square foot space. Really, shopping centers are 4, 5, 6,000. We have some that are 100,000 square feet. Let's say that your shopping center is actually 10,000 square feet. 10,000 square feet. Let's say every single month you're making from that 10,000 square feet $10,000. Okay? Times 12. $120,000 you're making every single year. We're going to divide that by a 7 cap. That means that your property right now is worth $1,714,285.71. Okay? $1,714,285.71. Let's just say that you take that same $120,000, you increase the rent by 3%, means $3,600 for the year. Now instead of making $120,000 a year, you're going to make $120,000 plus $3,600, means you're now making $123,600. We're going to divide that by 0.07. Look what you just made that property worth. Your property is now worth $1,765,714.29 when it was originally worth $1,714,000 plus or minus to make it easier. You raised your property value in 1 year by doing a simple 3% increase, $50,000 plus or minus. Imagine. You would have kept that money on the table by not doing a rent increase. This is why investors, big firms, people like you and I love commercial real estate. People love multifamily apartment complexes. Why? 200, 300, 400 doors. Just raise the rent by $20 on 400 doors. And if my math is right, you're at $80,000 that you're making every single year. I have to check this. Let me see. 400 doors times $20, $8,000. I was off, but I was still close by just 1 0 off, which could make it from 8,000 to 80,000 to 8 million to 80 million to 800 million to 8 billion. So zeros do matter. But you raising just $20 on 400 units makes you make $8,000 more a year. Now keep this in mind, guys. If you raise it by $20 for the entire year, you're talking about literally $2 a month more on rent. Who's not going to pay that? Right? Now imagine this right here is 400 units, $20 a month extra. That's 400 units times $20, which is $8,000. Now 8,000 times 12, $96,000 you just added to that property's value. Are you guys seeing where I'm going? When you have numbers that are bigger, you can multiply more, you can make more returns. That $96,000 that you just made a year made your property worth over $1 million extra. That's even at a 10 cap, at a 7 cap, maybe $1.2, $1.3 million. You guys can do the math after I shared how to do it already. You guys can check that out. So guys, raise rents, be smart with it, and understand that raising it raises the property value. You might be like, I'm not selling next year, the year after that. I just want the tenants happy. I don't want to raise rents on them, but you're hurting yourself. On year 3, year 4, you can't just come and slap them with a 20% increase. You're going to have to start at that 3% increase because they're not going to be able to survive if you do that. And that 3% increase means that you're behind 3-4 years when your property could have been worth a couple $100,000 more, if not millions. Raise your rents, guys, and be smart. Beauty of commercial real estate and beauty of the money in it if you're smart and know how to play it. Of course, the more doors, the more space, the more opportunity, and that's the game of it. Anyways, guys, that was a quick segment. I wanted to share with you about commercial real estate and why I love it so much and how there's so much money to be made. I'm helping clients do it. I'm doing it myself, and I'm seeing it every single day. This is why people love to buy beat up buildings with bad leases. They fix up the building, they raise the rents, the building's worth double, they do a cash out refinance, or they flip it. That's the beauty and that's the game, guys. Anyways, I hope you enjoyed this video. Thank you all so much for watching. And remember, I upload 3 times every week. I talk about real estate, money, and business. I don't want you guys to miss out, so subscribe. And if you got value, hit the like button. I'd really appreciate it. Anyways, guys, I'll see you all later, and I'm out.